Hello everyone. So unfortunately over the weekend there's a lot of senseless violence and death going on. It's very unfortunate. Hopefully that stops because that's the #1 priority. There should not be any senseless killing ever. Women and children should be off limits. There should be no death like this going on, and it's very unfortunate to see. Yeah, I don't know what else to say. Just hoping that things become better for both sides. So hopefully people are brought to justice, and hopefully innocent civilians and everyone are safe. So that's the main thing. So yeah, in today's video we're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, and the overall market. And hopefully things simmer down quick. All right, so without further ado, let's get started with the video. All right, so everyone clearly knows what happened on Friday. All right, what I will say is everyone who went short down here at 420 to swing short, right? But not just go short, right? Because mistakes happen. But if you went short and you started talking shit, dark humor, just a little bad joke, but you know what? I won't even say it. But you guys, good for you, to be honest. Like I'm for you to get that emotionally charged like an idiot and then not think about your future, think about the future repercussions of your actions. To think that, yeah, it's crazy. But yeah, that sucks for you. See you in the comments in the next few weeks when you guys recover your portfolios and decide to trade again. But yeah, just next time, guys, mistakes happen, but the most important thing is your lack of respect is the reason why you were not able to adapt to the situation. Your lack of respect for someone with a different point of view caused you to lose your money. And if you're already like this deep into your life, probably not going to change. But there is hope for you, because when there's a different point of view brought to you, you have to realize that, okay, you have to zoom out and analyze and not attach yourself to any decision that you make. You have to look at every single decision with a clear set of eyes and be like, okay, what is this person saying? Who is speaking to me, first of all? And what are his reasonings for things to happen? If you're unable to do that, good for you. Keep losing money. But regardless, that's, why I've been saying not to go short at levels of support. It makes way more sense to go short at levels of resistance. So now, we're going to take a look at the dollar, the VIX, and the bonds to give a more clearer view of what's going on in the overall market. Because right now, clearly, the equities are showing some bullishness, but we need to see if the other instruments are going to start showing some potential weakness in equities and in the stock market. All right, so let's get started with that. All right, so this is a chart of the VIX. The VIX is important to look at because it has an inverse relationship to the market. If the VIX is showing bullishness, then that is generally bearish for the market. And I was showing how the VIX, this setup right here, until Thursday, very bearish setup. It was not good. We bounced to the highs and gave more way for a move to the downside. So now, okay, what is the VIX showing now? Clearly, this is still not a bullish setup. The VIX being below 1850 and 19 is it's bearish for the VIX, which is bullish for the overall market. Okay, and yeah, just keep that in mind. So this is overall, this setup right now on the VIX, this is disgusting. This is a disgusting setup, but pragmatically, we came right to a very major level of support, unfortunately. So what this is showing me is we could have a bit of a green bounce Monday. Very obviously, when you have such a huge move in equities, it's rare that we don't give some sort of a pullback. So the VIX with a big move like this to a level of support, I'm assuming we get a bit of a bounce here. And that should be That should cause the market to be a little red. I'd be surprised though, but that is what I'm thinking. The market should get a bit of a pullback and the VIX should bounce a bit. All right. Next, let's take a look at the yields. All right. So this is a chart of the 10-year yields. And looking at the yields is important because it generally has an inverse relationship to the market as well, similar to the VIX. If the yields are bullish, then the overall market should be bearish. But what's interesting right now is we're getting a bit of a decoupling from the yields and the bonds and everything and the market. So it's going to be interesting to see how everything develops moving forward. But what's been happening is when the yields start to show bullishness, that is bearish for the overall market. But interestingly enough, on Friday, we had a green day on the bonds. Okay, so the 10-year yields, the 10-year yields had a green day. So let's take a look at the 5-year yields. Also a bit of a green day. Let's look at the 20-year, also green. The 30-year also green. So it's interesting what's going on right now with the yields and the bonds. They're not showing as definitive of a correlation as we have been seeing before. But regardless, this is not really that bullish of a situation. On the yields, wicking up like this and not being able to break above prior levels of resistance is always very, very bearish. And that's not something that should be taken lightly. So there's that for the yields. Let's also quickly take a look at the dollar. So the dollar is also similar to the VIX and the yields. The dollar has an inverse relationship to the market as well. So if the dollar is showing strength, that is obviously very weak for the overall market. And once again, very similar to the VIX, the dollar had a very disgusting bearish setup. Bearish days, and now we're at a level of support on the dollar, unfortunately. So the dollar and the VIX are both at levels of support. We could get a bit of a bounce on the dollar and the VIX, which could lead to a bit of a pullback in the overall market. Next, this is a seasonality chart of the S&P 500 over the past 20 years on average. And if you look right here in October's chart, you can see that the beginning of October ends up being a bit of a bounce. And then towards the middle of October, we end up making a new low and falling lower. And then from there, we end up bouncing. So now basically all eyes are going to be on next week. Because according to seasonality, we end up making new lows. And definitely next week, we end up being a bit bearish. We end up getting a bit of a pullback. So now the question is that actually going to happen on the S&P? So are we going to break the 420 level and then retest 416 or 418 on the SPY? Are we going to drop from 430 and within this week and the next week, are we going to drop 12 to 14 points? That's going to be pretty interesting. But according to seasonality, that is generally what happens. So that would be pretty interesting if it does happen. But regardless, it just continues to go to show that even on pullbacks, you still have to be bullish. Unfortunately, regardless of when the pullbacks happen, on those pullbacks, those are really, really good opportunities to go long. And yeah, so that is the seasonality chart. And then of course we could see that October, November, and December end up being green according to the seasonality. So there's that. Next, let's take a look at the macroeconomic news for next week. All right, so this is forexfactory.com. Monday and Tuesday, we have Fed speakers speaking. We have Fed members speaking. Usually that's always causes a movement in the market. All right, but then Wednesday and Thursday is going to be very, very important. So Wednesday, we have core PPI data coming out prior to the market opening. And at 2 p.m. Wednesday, we have FOMC minutes. And then Thursday morning, we have CPI data coming out. So that is pretty interesting. That could cause some turbulence in the market, which could help seasonality. and like the bearish seasonality. But that is that would be pretty interesting, because what would happen to the psyche of people once we even, so if next week we do have a big move down and we break the lows, we end up breaking to 418, 416, people aren't going to be that bullish, in my opinion. I don't think people are going to be that bullish at 416. It might end up just dropping to like 410, to be honest. So that's going to be really, really interesting. Next week, going to be super, super interesting. At this, we're going to take a look at the chart, but just in general, with this big move to the upside, you can't start being bullish now. And it's going to be pretty interesting where everything goes from here. All right. And this Friday, we have earnings coming out. So you can see that JP Morgan, Citibank, BlackRock, Wells Fargo are going to start reporting earnings on Friday. That should be bullish for the IWM, the financial sector as well, the Russell 2000, because prior to earnings, there's generally an earnings run up. So maybe we can see some money funneling out of tech and the winners going into these banks, but a lot of it is going to be up in the air. It's going to depend on, you know, how the Fed responds with the minutes, as well as CPI data and everything that's going to come out. But this could potentially be like the earnings coming out, this could be potentially important and a bullish sign for the IWM. So let's see if that's the case. So there's that. So once again, guys, when the large tech stocks are showing strength and the overall market is at a level of support, or it's at extreme weakness, you cannot be bearish on the market. Okay, so very simply, let's take a look at Google. Google was bullish and showing strength all throughout here. That was basically I've been bullish, and I've been saying to be bullish for quite some time. Google, AMD, Nvidia. Remember, Nvidia was the first to start showing some strength along this trend line. Nvidia, Apple was starting to show some life and hold above 170, and then Apple and Tesla started showing some strength. Tesla clearly had that big move to the upside, right? And it's still trading above here. And then Meta had a huge move to the upside, finally broke above the 308 level. So guys, just put your egos to the side. Think about this logically. When the large tech stocks, which are the biggest companies in the S&P 500, when they are showing strength, you cannot be bearish on the market. So Amazon as well, holding support. So you can't, but you know, like they're showing support. The winners, Microsoft too, man. God, man, Microsoft just flew. So all of these stocks are clearly showing some strength. All right, and here's the thing. So obviously with the SPY, the reason why you cannot go short at levels of support is because it's not a high quality trade. The high quality trade is to go long at support. Give yourself some time. Trade with some high quality setups. If we're down here, right, and we're trading at 422, and you're like, oh my god, we're gonna drop to 416, blah 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 blah, you can't take that trade. Even if it drops from 422 to 416, that's not a logical, intelligent trade to take. You cannot take that trade. If the trade ends up moving in your direction anyway, so be it. But it's not a high quality setup. And just try to understand. Going long here, same concept. Going long on the SPY at 429, 430, 431. Does that make sense? No, it doesn't make sense. You can't go long over here. Now that you missed the longs down here, you have to wait. You have to either, if you're bullish, you have to wait for a pullback back down to 426, 427. If you're bearish, this was a great opportunity to go short. 430, 431 after this big green candle, as we touch this level, way better opportunity to go short than down here. So that's my current thought process. So in my opinion, with this big move on the SPY and the NASDAQ and everything, we need to have a bit of a pullback. This is not a sustainable move. If we get a gap up, that's actually even more bearish in my opinion. If we get a gap up, I'm holding on to runners. The contracts, they're fine. All right, holding on to runners. We sold the initial position for like what, 40-50%. We lost on the 430 calls that we bought for October 13th, but then we bought a bunch of other calls afterward. So it is what it is. But now is not the time to go long. 427 is the level that bulls want us to remain above. 426, 427. If we break below 426, 427, then this whole move is just weird and it was just fake. And that would lead to more weakness to the downside, in my opinion. So up here, it makes more sense to wait for a pullback or to go short. So that's my thought process. So once again, you know, we came retested close to the 38.2% fib level. And I was showing you guys like a retest of the 23.6 is almost guaranteed at this point. So definitely, you know, keep that in mind as well. And then just looking at the NASDAQ also just skyrocketed, but we stopped right at the 50% fib. So obviously that's not the most bullish situation. We also obviously filled this gap. So pragmatically, now is not the time to start going long. You have to wait for a pullback, and bulls want this above 362, 363. If we can hold above that, then sure, we can continue up. But just keep in mind, we hopefully, I don't know, honestly, for bulls, if it gaps up, then that's going to be really, really detrimental for bulls, in my opinion. But yeah, man, that should be it. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early Monday. Take care.